Hi, and welcome to another daily recap. So today I'm going to recap 129, and it's November 4, 2024, Monday. So on this day, I didn't get any trades on both EU as well as GU, but I had a simple game plan, but the price didn't meet my expectations, so that's why there is no trades on this day. So let's jump into the whiteboard and see what happened today and why I didn't get any trades on this day. So before proceeding to the technicals, we must first understand the fundamentals that there is no news today. So it's a very clean day. At the same time, price may sometimes not move as volatile as I expect the price to move. So that's why sometimes I don't get opportunities on no news trading days. Starting off with EU, the daily structure is bullish, the swing structure is bullish, and the price has mitigated the daily demand and it has stock bullish. So now let me zoom in. Now the price has mitigated into the daily demand, which has swept the liquidity, and price has mitigated the daily demand and showed a strong push up. So this means that the demand is very strong and the price can continue rallying up till it takes out this buy side liquidity above. That's why my daily bias is bullish right here. So jumping into the 4-hour chart, you can see that the swing structure is bearish, internal is bullish, and price has swept this sell side liquidity. Though the price has closed below this liquidity pool, I still say that it is a sell side liquidity sweep because you can see the price pushed up with a gap, and now it's going to take out this internal high. That's why I'm saying, though this is having a body closure, I'll be still considering this as a liquidity sweep. So jumping into the H1 chart, the H1 has mitigated this H1 demand and then made a strong push up. So probably this is the major swing structure that the price is concerned about. So all these are internal structures and price made a bearish eyeballs and then it pushed up. So sooner or later, if the price takes out this swing high, I'll be marking this as my swing low because this is very strong because it has held itself and pushed the price up. So this would be my next swing low. But since the price did not take out any my current swing high, I am still trading with this as my swing low. Okay. Zooming in, this is the current price action that I'm going to deal with. So there is no demands from the left. So the phase D shorts are not valid today, but they are valid when the price chalks bearish. So one of the boxes in the phase D shorts would be not ticked, but the three boxes would be ticked. So that's fine. 75% of success rate. That's fine for me. But I need to see the phase D or price to chalk bearish during for the phase D shorts. But for now, phase A2 is high probability than phase D because there is no demand, no supply to the left, and the price can move up easily and fastly. And also with the daily buy sell liquidity above and with the high time frame supporting the bullish bias, phase A2 longs are high probability. This is high time frame supporting the bullish bias. Okay. What is the plan for taking longs? The first thing is that price can take out some sell side liquidity, some sell side liquidity here or some sell side liquidity here, and then it can push up. So from this freshly formed demand, I can look for longs. There is no target for me because since there is no demands to the left, no supplies to the left, there is no target for me. But I can look to target the daily buy sell liquidity above. The second case is that price can come down, make a strong internal pullback, mitigate this fair value gap or this POI, probably or this POI, whichever is, you know, and the price can chop bullish, and then I can look to trade from this freshly formed demand zone and then take long. I'll be looking for this inverse fair value gap probably, and if that's not been mitigated, then it's not about the fair value gaps or breakup blocks, it's about the sell side liquidity. So here I'm looking to target this Asian low and the price to mitigate this, whatever you call it, and then I must see a price to chalk bullish. I'll be interested only in this freshly formed POI to look for longs. I'll not enter directly using the inverse fair value gaps, those kind of things. Freshly formed POI is the key. And this is the session update at the end of the day. Price took out the swing high. As I already told you that I'm going to make this as my swing boss and this as my swing low. I did it because the price took out the swing high. Regarding the sell-side liquidity sweep, price did not take any sell-side liquidity. It just pushed up, took the swing high, and then it came down. There is a chance of phase A2 longs, but there was no entries, and the price pushed down, making an internal breakout structure, bearish internal breakout structure. Now this becomes a strong internal high, and this is a valid POI which has flipped the demand right here. So maybe tomorrow or day after tomorrow, I can expect the price to push up, mitigate into this demand, and then chop bearish. Then I can look for shorts targeting this inverse parallel. So that's a different story for tomorrow. But for today, there is no rates on EU. Jumping into GU. So in GU, the story is the same. The swing structure in the daily is bullish, internal is bearish, and price has mitigated the daily demand zone. And with but the contradiction here is the price has mitigated this daily supply. The supply has swept liquidity, and the supply chain is getting respected. So there is a high chance that the price can come down to flip this demand, because this demand is not high probability because it was formed a long time ago and it is not that high probability for me. So what I'm expecting is just stick with the H1, and whatever be the session direction, just trade in line with the session direction. But for now, I didn't realize that this could be invalidated. I just focused on what I thought. I just wrote it down. Price rejected off from the daily demand strongly and gave a strong failed reaction of the daily supply. This could indicate that the price can take out the buy side liquidity above and the supply. So price came down, pushed up, and it strongly rejected, but again it pushed up, which means that this this reaction should have provoked the price to come down. But this reaction failed, which means the demand is still in control and they can push the price up to take out this daily buy side liquidity. So that was my thought process when I was analyzing the chart. But now, after a month, after gaining a month experience, then now I can say that the daily bias is neutral because price can come down to take out the sell side liquidity below also. So that's it from the daily. Coming into the 4 chart, the swing structure is bearish, internal is also bearish, and there is a ton of buy sell liquidity above, which the price can take today. If possible, the price can not take this buy sell liquidity, come down to mitigate this 4-hour demand, and then push up later in the day to take out all the buy sell liquidity. That would be very perfect for me to take longs and grab some profit, but we can't expect that. The thing here is, if the price takes out the buy sell liquidity, then I can look for H1 to chalk bearish and target this 4-hour demand. So anyways, uh, we are having some kind of trades. Here you go. This demand has flipped this supply. Thus, it now becomes a high probability demand where the next higher low can be formed and push the price up to take out the daily target. I can look to place shorts to target this 4-hour demand when the price takes out the buy side liquidity and chalk bearish in the H1 time. For longs, I need to see the price mitigate the 4-hour demand and chalk bullish to take longs to target the 4-hour swing high. Very simple. So coming into the H1, the swing structure is bearish. Internal is bullish. I neglected this as my strong internal high because it's going to be taken out anyways. So I'm starting to mark this as my internal structure. So this becomes my weak internal low. Strong internal low. I was. Now the price can take out this buy side liquidity, chalk bearish, and then I can look for shorts. Oh, 1 second. Price can chalk bearish. Take out this buy side liquidity and chalk bearish right here. And this would be the fresh POI form during the session. Take the trade right here and then target the 4-hour demand right here. Before it's not about the 4-hour demand, it's about the Asian lows. Target the Asian lows in specific. And if the price does not give me an opportunity and reaches the 4-hour demand and takes out the Asian low, then I can wait for the price to chop bullish. Then I can look for this POI and take longs. And that long would probably run during the lull period of the New York session. So anyway, there are two kind of opportunities. So it's perfect trading day for me to take risk. And as expected, price came down to mitigate the forward demand, but it did not take out the buy side. Now it's perfect for me because it is a low resistance liquidity as well as equal highs. So there is a ton of buy side liquidity being accumulated right here. All I want to say is price to chop bullish, and with the fresh POI, you can easily target all the resting liquidity above. But price did not want to take out the buy side liquidity, rather it just took out the London high and pushed massively down. So probably tomorrow, this internal structure can continue tomorrow. So price came up, came down, now it came up, and it came down. Now tomorrow, price can go up to take out this weak internal high. For that, I need to see the price to chop bearish and then a strong displacement up on the side, slight pullback into the PY, boom. So that would be an obvious trade for the next day. But for today, there is no trade because uh, price didn't go as per the game plan. So it is what it is. We just rinse and repeat. So that's it from my side. So see you tomorrow. Until then, cheers, guys. Bye.